I always enjoy getting the opportunity to moderate these webinars, so I think I'm going to try to move my slide back one real quick. But last fall, I wanted to just let everybody know I did get a chance to work with John Seaton from Real Foundations, and we put together a combined client case study session for Realcomm 2020, and it allowed 5 different companies to tell their investment management story. And what was so interesting about that was each of them ended up selecting a different vendor at the end of this process. And we'll put a link in the show notes here in just a few minutes if you want to see the recording of that. It was done in October of last year, and I wrote a blog about it, and we'll have a link to that as well. And what was interesting to note is that when companies tell their story about this journey that they have for selecting new software or integrating new software, they start to develop these common themes. And for those in our live audience or those even watching the recording, you might be considering new software, minimizing your application portfolio, or even making existing applications work better together. And I'll have a survey for you in just a few minutes, so see if we can capture why you're attending this seminar, this webinar. And based on those common themes, I put together this sort of Jeff Foxworthy style common indicators that you might need new software. So if you're describing your current investment management system and you have over 20 non-integrated solutions that include things like Excel, Access, ACT, Timberline, CTI, or even a menu-driven green screen like this, like Orpheus, you might need new software. And shout out to John Avery of Legal and General Investment Management for that example. If your business process for sending out investor reports involves large stacks of paper with multiple people in a conference room manually collating paper folders to put in the mail, you might need new software. And hat tip to Michael DiBenedetto of Northland Investment Group. And this is my hair on fire themes that I heard from multiple different clients. If your president is on the phone with an investor and runs into your office asking which funds they are in, what are their latest returns, and when was their last distribution, you might need new software. And kudos to Scott McGinnis of Cohen Asset Management for sharing that. And if your CEO asks a new question about the company's investment portfolio and has already accepted the fact that they're going to have to wait a week to get the answer, you might need new software. If the number of assets in your investment portfolio has grown along with the number of investors and your current system can't keep track of everything, if your third-party property managers are sending you Excel and PDF reports in all different formats and non-standard chart of accounts, you might need new software. And hat tip to Jacob Teplin of Crow Holdings for sharing that one. If your company has already tried new software and tried to do an implementation, but the project dragged on so long it was eventually scrapped, you might need new software. And if the bulk of your investors are telling you they don't want to receive paper copies of their investment report, company performance documentation, or any other report that could be delivered electronically through a portal, you might need new software. So I'm sure we're going to hear more examples of that from our panelists today. But one last point, and it came through on a lot of the different case studies. We heard that once that vendor selection process is going along, at some point, it becomes less about the technology and more about the relationship, who you can work with, who you can trust. And I think you may hear some of that echoed today. So let me introduce to you Joe Moskowitz. He's the Director of Business Development and Strategic Solutions at Dealpath. Joe.
Hey, thanks, Chuck. And thank you, Nancy, and the Realcomm team for having me today, and those that are on the webinar, thanks for joining. So I'm at Dealpath. I work on business development and strategic solutions. Today, I'm going to take you through a brief deck and talk about the 3 ways that IT teams can remove inefficiencies across the pipeline. And I say IT teams, but really I'm referring to business technology teams, the actual business users themselves, and anyone who is a stakeholder in technology and deal management and software implementations across the organization. So first thing, it really starts with a smart, goal-oriented implementation that's tailored to your process. You're most likely not the first deployment, and can therefore benefit from similar use cases and existing users of the platform. Existing users who are more than likely your industry peers and competitors for investment opportunities. Now, I know that all CRE investment organizations are different, but to an extent, they're also similar in a lot of ways. The point is, leverage the technology organization, leverage what they've already done successfully, and know that you're not actually starting at point zero. What you want to do is avoid generic and canned tools that force your processes to adapt instead of streamlining your existing processes. So you really have to find that sweet spot between industry standards and what's been done successfully and what works in the tech organization, but also your core processes and what's been working for you as an organization. That sweet spot right in the middle, that's where you're going to be truly successful with technology implementations. It'll also, with those things, allow you to go live with the software with a very minimal amount of change management. Obviously, change management is a scary concept, and it's on top of mind for a lot of us when we're thinking about software implementations. But keeping these concepts in mind, there really is a way for you to minimize that change management. So in thinking about tech-driven process automation, you really look for a platform that applies smart configuration across your team, across your organization, and across your pipeline. If X, then what happens? Then who needs to get involved? If Y, then who needs to approve this? Then what happens? What's the sequence of events that occurs after X, Y, or Z? And there's a lot of areas where this could be commonly applied across the organization: access, user access, and user management, data completeness, and data governance. So what sort of things across all of my workflows need to happen every single time, regardless of what the scenario is? After I identify those things, how can the software that I'm implementing understand that and work with me each time to ensure that those things are getting done, that those things are getting complete? Approval workflows, and then dashboards and reporting. We're all generating reports for key stakeholders. We're all generating reports at regular cadences for investment committees and third-party investors. How can we leverage the technology to automate the generation of these reports, but also automate the delivering of these reports systematically? And having these auto configurations will allow you and your team to identify and address where there's some potential human bottlenecks, and then create efficiencies that way as well. And the last point here is to find a platform that's forward-looking and that has good market share. Because with good market share, the tech platform sort of organically evolves into the best version of itself. So think iPhone jailbreaking, for example. So Apple, iPhone jailbreaking when engineering and tech folks sort of manipulate the iPhone to make it do what they want it to do, right? Apple utilizes these jailbroken custom iPhones to get a better understanding of what the end users actually want out of these iPhones, and then bring that back to their product roadmap and sort of work it into the product development. And that's what you're going to find with a lot of these technology platforms that have a good customer base. It's going to be a direct reflection of what the market at large is asking for out of an investment management technology software. And then the third thing, and this is going to go a lot into Kevin's previous presentation, is to really capitalize on integrations to centralize the information and to centralize these insights. You really want to leverage the API framework that these technology platforms have to bring it into your existing tech ecosystem. I mean, most technology platforms are in constant communication with one another, whether it be, building out substantial interfaces with each other, or just scoping out ways to exchange data one-off. I know that, myself, I'm always speaking to Navigator, I'm speaking to MRI and Yardi, I'm speaking to consulting firms like Cohn Resnick and Real Foundations to figure out how we can make these integrations more robust. And I implore you as an end user to sort of think about it in the same way, right? What is standard and what's not standard, ask these questions to the tech vendor. But also know that they're not really limitations, right? If something is not standard, maybe not built out, there's not a pre-existing integration between, you know, the software you're talking to and one that you have in your ecosystem, that doesn't mean that there can't be. Most of these tech platforms have a robust API framework that can be connected to other platforms with a little bit of work on the tech side, regardless of whether it's standard or whether it's not. And the last thing that I'll just briefly touch upon is a case study with Oxford. The challenge for them was to really centralize and improve access to real-time and historical data while creating these efficiencies across their workflow. And the solution was recognizing that software development for Oxford was not their core competency. You know, industry-leading investments and investment management, that was their core competency. So having, you know, implementing Dealpath to sort of handle the software development piece of what their core competency is together made them an overall holistic, successful solution for Oxford. Chuck?
And 3 days of work into 3 minutes. You're standing by that?
I am, yes. And I implore you all to do the same.
Oh, okay, no, that's good. I want to think, I noticed identifying and removing bottlenecks on your last slide. How do you think companies can get better doing that?
Well, there's certainly a lot of ways, and you could even leverage the technology to do so. So for example, in Dealpath, we have a very robust task management, task workflow piece of the software where you can see who's working on what and get insight into, you know, where things may be taking longer, create some pattern recognition on how long certain aspects of the deal management workflow should be taking, and then sort of drill down into the reasons why things are getting caught up in a certain deal phase, and then get better at it. Take your human element of your deal workflow and improve upon it.
Now you mentioned, we got a few more seconds here, so I want to hit on a couple of points that you said because I don't want to lose it. You mentioned tech-driven projects versus business-driven projects. Wouldn't you get pushback from that from most companies?
Well, I think that it's a combination of the two, right? I think that a lot of times organizations are finding a significant dichotomy between the tech team and the business team. The sweet spot is to find, you know, or organize a committee, regular touch points between the tech and the business sides of the organization to get a true understanding of what's needed, and then look for software that can solve for, you know, the conversations that you're having together.
Okay, all right, great. I'm going to ask you one more question while Nancy brings the rest of our panel in, because we'll have more questions for everybody else. But you mentioned something, I want to ask you, why do you say automation in commercial real estate is a slippery slope? And everyone else can can bring their cameras on while you're answering, so we can all smile at you.
Well, I think that a lot of these investment committees get a little nervous when it comes to automation because they want to keep all of the decisions and control within the human element side of things and not really let that all go. So there is a potential for it to be a slippery slope, but the goal is to find that sweet spot between you know, leveraging standardization, templatization, and industry best practices that a software company like Dealpath knows and implements, but then also having your processes fit into that software. So you're still doing things the way that you have been and that's been working for you, and you're still maintaining control over the decisions you're making. You're just making them in a smarter way.